The UAE's central bank has held its benchmark interest rate steady at 3.65%, and the reason comes down to a peg, a dollar, and a decision made in Washington. The central bank of the United Arab Emirates kept its key rate unchanged, moving in lockstep with the US Federal Reserve, which also left borrowing costs on hold at its most recent meeting. That meeting carried extra weight. It was the first major policy decision under new Fed Chair Kevin Warsh. To understand why the UAE follows the Fed so closely, you have to understand the dirham peg. The UAE's currency, the dirham, is fixed to the US dollar. That peg has been in place for decades, and it brings real benefits: stability in trade, predictability for investors, and a reliable anchor for the broader economy. But it comes with a significant trade-off. When your currency is tied to another country's, you largely import that country's monetary policy as well. When the Fed raises rates, borrowing costs rise in Dubai and Abu Dhabi too. When the Fed cuts, Gulf borrowers get relief. The UAE central bank has limited room to move independently. So when Washington holds, the UAE holds. That dynamic shapes the stakes around every Fed decision for the entire Gulf region, not just for markets in the United States. Right now, both central banks appear comfortable waiting. The Fed has been threading a careful needle. US inflation has come down significantly from its peak, but it still sits above the Fed's 2% target. At the same time, the American labor market has remained resilient. That combination, sticky inflation, solid jobs data, has kept policymakers cautious about cutting rates too soon. The Warsh era at the Fed is just beginning, and markets are paying close attention to his tone and communication style. Analysts will be watching for any signal that his approach differs from his predecessor, whether he tilts more hawkish, more cautious, or charts a new course altogether. Early signals from a new Fed chair can move markets even before a single rate is changed. For Gulf economies, the Fed's next move is not a distant American story. It is a direct input into their own borrowing costs, credit conditions, and economic momentum. Any shift in US rate expectations, cuts later this year, or a longer hold, flows directly into the region. The practical takeaway: if you have exposure to Gulf markets, UAE assets, or dollar-pegged economies more broadly, watch the Fed's communication as closely as you would any local central bank, because in this part of the world, the Fed effectively sets the rate. This briefing is brought to you by First Financial News. Clear, daily coverage of the economy and markets at firstfinancialnews.com.